There are only simple neutral candlestick patterns, meaning patterns formed by one candlestick alone. The neutral patterns are formed by the doji family, which is itself formed by 5 types of doji. The main characteristic of a doji is that the opening and closing values of a candlestick are equal to one another. In other words, dojis have no candle body. That's the key to understand why dojis are a neutral pattern. The fact that the open and close values are equal to one another implies that there was no clear winner in the internal battle of buyers and sellers of the candlestick. During the formation of the candle, buyers and sellers struggle to see who is going to dominate that candlestick in particular. If the candlestick closes higher than it opened, it generally means that buyers won that battle. If the candlestick closes lower than it opened, it generally means that the sellers won that battle. If the open and close values are exactly the same, it means that neither buyers nor sellers won because they have similar power. And if they have similar power, price has no specific bias or direction. That's why a doji is mainly a neutral candlestick pattern. Even though the main characteristic of dojis is simple, there are 5 different variations of dojis. We have the doji star, the long-legged doji, the gravestone doji, the butterfly doji, and the 4-price doji. Even though dojis are neutral patterns, these different variations of dojis imply different things about buyers and sellers. The doji star received this name because its shape vaguely resembles the silhouette of a star, which makes it easier to remember the candlestick shape. The main characteristic is that the open and close values are equal to one another, otherwise it wouldn't be a doji. The other important characteristic here is that there are small upper and lower tails, and they have equal size. The fact that the upper and lower tails are small implies that there was a battle between buyers and sellers during the formation of the candlestick, but this battle wasn't so violent, and that resulted in a candlestick with relatively low volatility. The fact that the upper and lower tails of the candlestick are equal to one another implies that at some point during the internal history of the candlestick, buyers were winning the battle, and in another point, sellers were winning the battle. But both buyers and sellers temporarily won that battle with the same intensity. You can think of the candlestick tails as the marks of this battle. That means that the doji star is a completely neutral pattern. The long-legged doji is exactly the same as a doji star, with one exception, which is the size of the upper and lower tails. This difference in the length of the upper and lower tails implied that the battle between buyers and sellers was more heated than in a doji star, for example. Even though the battle was more violent, the upper and lower tails are still equal in length, and that means that buyers and sellers still have the same power, so the long-legged doji is a completely neutral pattern. The only difference is that it's a more volatile pattern than the doji star, meaning that the internal battle between buyers and sellers was more heated. The gravestone doji is where things start to become a little trickier because the upper and lower tails are asymmetrical. For instance, in the gravestone doji, the upper tail is large and the lower tail is non-existent. That means that during the internal history of this candlestick, buyers were once up there in the high of the candlestick. However, in order for the candlestick to close in the same price as the open and become a doji, sellers had to win that battle at the top of the candlestick and bring the price down. Despite the asymmetry in the candlestick tails, the pattern still implies a neutral bias because the open and close values are equal to one another. The butterfly doji is the mirror image of the gravestone doji. We can see that at some point during the internal history of the candlestick, sellers were winning the battle near the low, but buyers had to overcome the sellers to make the candlestick close in its opening value. The last type of doji is the 4-price doji. The name comes from the fact that all the 4 prices in a candlestick, meaning the open, the high, the low, and the close values, are all equal to one another. Thinking in terms of the interpretation of this pattern, there is no battle between buyers and sellers, as we can infer by the absence of upper and lower tails. Notice that there are 2 things that we pay attention to in dojis: the symmetry between upper and lower tails and their size. Next, we are going to look at simple reversal patterns, both bullish and bearish. The first pattern we are going to study is the hammer, which is a simple bullish reversal pattern. In other words, when price is going down and a hammer appears, that's a signal the price will reverse its direction to the upside. The shape of a hammer has a few characteristics that make it a bullish reversal pattern. The first thing to notice is that the hammer received its name because the candlestick resembles the shape of a hammer. This pattern is also composed of a small bullish candle body that lives on the upper range of the candlestick. Hammers can have a small upper tail, but one of its main characteristics is that it has a large lower tail. The logic behind a hammer is quite simple. We need to roll back the internal history of the candlestick to understand why it means a bullish reversal. Notice that the hammer opens on its upper range, creates a large lower tail, and then it closes on the extreme of the upper range with a small bullish body. That basically means that sellers had the control in the beginning of the formation of the hammer, and that's why price was down there at some point. However, once buyers realized that the sellers were gaining control, they appeared to assume control again, so they make price close on the upper extreme of the candle range. The large lower tail signifies the fact that sellers had the control, but buyers were able to overcome that. If buyers are able to do that, it means there is more buying pressure than selling pressure on the candlestick. The way a hammer generally appears in a price chart is when the price is going down, then a hammer appears, and immediately after, price begins going up. One thing to remember here is that not all hammers work. In other words, sometimes a hammer will appear and price will continue its main direction without reversing as the pattern suggests. There is an important lesson here that hammers, like any other candlestick pattern, are just one sign about what the market might do in the future. They are not definitive signals. Another point of confusion that is relevant not only to hammers, but to all candlestick patterns is the fact that the shape of the candlestick can vary a lot and still be classified in the same way. For instance, a hammer might have a slightly larger candle body or a small upper tail and still be classified as a hammer. The point is that these candle patterns don't have a rigid shape. They have an overall shape that is malleable and can be subjected to some changes. The next pattern we are going to see is the inverted hammer, which is a simple bullish reversal pattern. The inverted hammer is very similar to the hammer, but it has one major difference. The candle body lives in the lower range of the candlestick, so naturally there is a large upper tail instead of a large lower tail. The inverted hammer is still a bullish reversal pattern because the candle body is bullish, but it's a weaker pattern relative to the hammer. To understand that, we need to roll back the internal history of the candlestick. The fact that the inverted hammer has a small bullish body and a large upper tail implies that at some point during the formation of the candlestick, buyers were really strong. However, sellers were able to overcome that and bring the closing of the candlestick to its lower range. Even though sellers prevented buyers from closing the candle on its upper range, buyers still managed to win the battle in the lower range by creating a bullish body. Given that context, we can see that even though buyers won the battle in the end, they are not as strong as they are in a normal hammer pattern. The way an inverted hammer appears in a price chart is when price is going down, then an inverted hammer appears, and then price will tend to go in the opposite direction right afterwards. The next pattern is the shooting star, which is a simple bearish reversal pattern. The shooting star has a very similar shape to the inverted hammer pattern, but there are two fundamental differences. The first is that a shooting star is a bearish reversal pattern, while the inverted hammer is a bullish reversal. That means that a shooting star appears when the price is going up to signal a reversal to the downside. The second difference is that a shooting star has a bearish body, while the inverted hammer has a bullish body. The shooting star pattern is formed by a candlestick with a small bearish body that sits in the lower range of the candlestick and a long upper tail. It received this name because it resembles the silhouette of a shooting star, so that's one way of memorizing the pattern. The logical interpretation of why this is a bearish reversal pattern is that, since it appears when price is going up, The long upper tail implies that buyers were once dominating the candlestick, but sellers were strong enough to bring price down and make the candlestick close with a small bearish body in the lower range. All of that implies more selling pressure than buying pressure. When that happens while price is rising, we have a signal that the trend might reverse to the downside. The way a shooting star works is that price will be going up, and then after the shooting star appears, it will start to go down. Let's remember once again that this is just a signal. There's absolutely nothing that stops price from continuing going up after a shooting star pattern, just like with any other pattern. The next pattern we are going to study is the hanging man.